A shift is happening. The data is showing it, and I'm going to share a number with you that no one seems to be talking about. We're talking about the Atlanta real estate market. We're doing it right now. Let's do it. John McCoy here, Atlanta's Real McCoy with Keller Williams Realty, Chattahoochee North, and we're jumping into the Atlanta real estate market numbers. We're going to look at the May numbers because we're in June right now, so we're always looking retrospectively back at the numbers from the previous month, and we're going to see what these numbers say. For me, in my experience, it's always twofold when it comes to understanding the market. One is getting stories from agents that are in the market and buyers and sellers that are in the market, and looking at the numbers to see if they match up with those stories. So today we're sharing both. So if we pop these numbers up right here, we're going to take a look at what's happening in May in 2022, and this one's comparing to May 2021. Not really that big of a deal to go in and kind of look at these numbers from a May 2021 perspective, but we will look at May 2022. So this last month, we see that there are 4,902 active listings. We're going to take a look here and see that 7,269 pending listings. Those are the listings that are under contract. Now there's an interesting number here, and this pending ratio here is what I'm talking about, what no one else seems to be talking about. And we're going to come back to this number in a few minutes to show you what I'm talking about here and why this number I think is so important. We see for this last month that we had 4,847 sold listings. Going down here, there were 13.8% failed listings. That means that the houses went on the market and for whatever reason they didn't sell and the listing period expired. So 13.8% of the homes didn't get past or didn't sell in their listing period. Still 1 month of supply of homes, so still super low out there, which continues to lead to this, and that's the median sales price for all of Metro Atlanta is now $460,000. Two more numbers to take a look at here that's important. One is the sales to list price ratio is 102.6%. This is a second important number that I'll talk about a little bit and what this is kind of showing or what I think it's showing. And then the last thing is 8 days on market. So homes are still going fast here. Before we jump into the local numbers, I want to take a quick look at what's happening nationally. Nationally can help us tell a story either of what's happening here, because we're obviously a part of the national numbers, but really what could be happening in other places in the country that could come here soon. One of those numbers that's really important is the number of mortgage applications. This has continued to go down this year, and now we're at a 22-year low for the number of mortgage applications that are coming in for buyers. When you add this to the 2-year low that's happening with builder sentiment, it looks like, again, that there's a shift happening in this market, that buyers are starting to slow down their applications and aren't looking to purchase anymore, at least those that are looking for a loan. And builders are seeing this too, because builder sentiment's going down because the number of people coming in to purchase new home construction builds and the construction cost materials are going up, so builder sentiment is going down. And lastly, the big hit that's happening to buyers is the continuation of inflation, which is causing the mortgage rates to continue to go up. And what we've really seen is a really volatile time right now for mortgage rates. They're spiking and falling and just jumping all over the place as new numbers come out between the Fed talking about raising the rates and between inflation numbers, which those two go together. Right now, today, we're looking at an interest rate of 5.9%. Now, 5.9% can sound crazy because we've been so long at the 3s and 4s and even down to the 2s that 5.9% sounds really high. But if you look over historical numbers, really 5.9% is still lower than what we historically seen, at least the past 30 plus years. So I told you stories really go along with numbers, and we see if they come together to give us a full picture. And as I'm talking with agents, as I'm hearing them out at different meetings and my own experiences, one thing I'm seeing is a ton more of open houses. Now, those have been gone since the pandemic started for obvious reasons, but those should have come back a little while ago if it was just the pandemic causing it, but they weren't happening. What's happening now, though, is since we're seeing less buyers come in, agents are starting to put open houses in to try to build back that momentum of people coming in and seeing the homes and trying to get them sold. Another thing I'm seeing is we're hearing about prices being dropped. Again, that was something that really wasn't happening over the last 2 years. We're seeing offers being on houses, but we're not seeing the crazy multiple offers of 30, 40, 50 offers. Now, there's still multiple offers in a lot of cases, but we might be seeing just 2, 3, 4 offers on a home. Now, one other thing I'm also hearing that agents are telling buyers is that, hey, don't worry too much about the interest rates. They are important, but if you go ahead and get under contract now, if the interest rates continue to rise, then hey, you've gotten a better rate than what you might get in a year or two. And if the interest rates fall, then you can just refinance. So that's another story that I'm hearing. I'm going to come back to that story because on the whole refinance part, I think there's something you should know about it. It's important to be knowledgeable when it comes to refinancing. All right, if we come back here and we jump back into these numbers, I'm going to go a little bit more detail. I'm going to look at the 6-month trend here that's happening in Metro Atlanta. And I told you there was a number that was important that no one's talking about, and that's this pending ratio here. And what the pending ratio is if you take the number of pending homes and divide it by the total number of homes that are on the market, you get your pending ratio. And what we're seeing here is a trend. And it's a trend that, again, I don't think anybody's talking about that they should be. This is a trend that I think is showing the shifting market, more so than this number down here. A lot of people will look at the sales prices. Yes, they're going up. They'll look at the sales to list price ratio. Yes, it's going up. And they'll think, hey, this market's still hot. We can still list for any price we want and get it sold, and you're going to have multiple offers. Well, a few things with that. One is I think this 102.6% is so high here because we've kind of trained buyers and agents to think that we're having multiple offers and this home is going to sell for much more than the list price. However, I just got a couple people under contract, and that wasn't necessarily the case. What we did is we jumped into more hyper-local numbers, not just the comps, but also seeing, hey, how much are these comps? How much are we going over the list price? How long are they staying on the market? And when we zoomed in really close to the areas that my buyers were looking in, we saw that actually the days on market were a little longer than the average. We also saw that these homes were selling maybe a tick above list price, some were at or below list price. So what we did is we actually didn't go in at 102.6% over. We came in at list price, right above, barely at another one, and we got both of those homes. So what does this mean? Well, in some places, yeah, you might need to offer over the list price of the home, but in other times, you may not. And what I think buyers are doing is they've gotten so used to offering over list price or hearing about it, and the agents have, that we're still offering well over the list price, but maybe don't need to. I think it's super important to have an agent that really knows the market, and specifically the local market and what's happening, to know how much over list price you need to go, if any at all. Now, what's making me think that we're starting to see a shift? And that's here, this pending ratio. We're seeing a trend here, and that trend's this. The pending ratio back in February, if we look, was 68.4%. You see it go down to 66.9%, then to 64, and now to 59.7. We see this pending ratio going down. Now, we are in a market that's traditionally a more active market right now. We're coming into the summer months. So we do have more homes coming on the market, but what we should see is more homes also going under contract. And that's not what we see. It would definitely be interesting to see what happens in June and July when it comes to these pending ratios. I think that this number is going to continue to go down, and we're going to start to see a slight uptick in the months of inventory and days on market. Now, what does this all mean for you as a buyer or a seller or investor? Well, right now, again, for buyers, it's tough because we're in a really volatile time with interest rates. And sometimes it's hard to figure out whether you should buy now, wait, whatever the case may be. One thing I would say is I mentioned that a lot of agents are telling people, hey, if you get under contract now, you lock your interest rates. If the rate goes up in a few years and you're in a better rate right now than a few years from now, that's great. That's a true statement. Some are saying, hey, if it drops down, then we can refinance. I want to pump the brake on that for just a second, because when you refinance on a home, there's closing costs involved with refinancing, and you've got to have enough equity in your home to do the refinance. So the idea that, oh yeah, you can automatically refinance in a year or two is not necessarily true. The other thing you've got to look at is is it really worth refinancing? Speaking from experience of going through the refinance process, as I just crunched the numbers and looked at it, since there's closing costs involved with refinancing, you've got to figure out if the amount of closing costs you're paying to refinance is actually worth it. And how to do that is you got to figure out how much longer do you think you're going to be in the home. It all looks great when you're refinancing and you get the number of, hey, you're going to pay $200 or $300 less per month for your mortgage, which is great. But how much did it take in terms of the closing costs when you refinance to get that lower amount? So what I figured out is it takes about 6 to 8 years, somewhere in there, to actually recover the amount of money you put down in closing costs when you refinance in terms of your lower payments. Because if you're saving $100 a month, it's going to take a while to recuperate that $4,000 or $5,000 in closing costs that you paid to refinance your home. That means when you're looking to refinance, you really need to figure out, hey, are we staying in this home for 4, 5, 6, 7 years? If you're staying long enough, refinance makes sense. If you're staying 10, 12 years, in the long term, that works. But if you're looking to move in 4 or 5 years, refinancing doesn't make any sense because you actually spend more money in closing costs than you would recover from the saved amount that you're saving on your mortgage payment. So I hope that makes sense for buyers out there. If you have agents kind of telling you, hey, you can just refinance if this rate doesn't look good in a few years, you got to be careful with that. If you're a seller, what you need to watch out for is this changing market. A lot of sellers just think you can put any price you want on a home, don't have to worry about doing anything to the home. Agents coming in, just putting it on the MLS and think everything's going to sell and go on with life. And that's starting to change. We're starting to see some pocket areas that's not the case. So you definitely need to make sure of a few things. One, as a seller, make sure your house is ready to go. Even if you don't need to do all these renovations, but at least make sure it's clean and nice and good to go into. The other thing is you need to be ready with price and be very reasonable. My suggestion as always is to match the price what the market is showing. Don't try to push that price. If the value of your home is really worth that much, I promise you're going to get multiple offers and people pushing the price up to that value. But if you look to see a home sold that was just like yours, last month, and you want to list it for $30,000 over the list price, you really need to make sure you understand the market and what the trends are in your local, hyper-local market. Because it could be you put your home on the market thinking it's going to sell, and it doesn't. And if you're one of those people right now that are trying to buy and sell at the same time, where you think, absolutely, my house is going to sell, and so you get with some kind of company that helps you buy a house first and you go back and sell, you got to be careful right now in this time, because that could get you in trouble, because they might be telling you that your home can sell for $30,000, $40,000 more than it really can. You go buy a home that maybe was based on that extra money you were getting from the sale of your home. You now list your home after you purchased and your home's just sitting there. So I'm not trying to scare you into doing the whole buy and sell thing at the same time, or buying first and then selling later. I just am trying to educate you to make sure you understand what's going on in this market right now, the shift that looks like starting to happen, so you can make the most informed and wise decision for you. Now, for those that have been watching my channel, especially last month, you've seen that last month I asked people, hey, what kind of hyper-local numbers would you want? And I had a number of comments asking for areas such as Duluth, Norcross, Peachtree Corners, Johns Creek, Alpharetta, Stone Mountain, Roswell. And so I'm putting hyper-local numbers out beginning of each month, and I'm putting them out as shorts right now. So you're not going to see them in the normal section of my videos. You'll see them as shorts. They're just quick 1-minute clips on hyperlocal numbers. If you're looking for more hyperlocal numbers, I'll be doing that each month as long as the demand's there. I'd be curious to know though, for those that are watching right now, put in the comment section below of why are you watching these videos? Are you a buyer? Are you a seller, investor? Are you just curious about the market and what's going on? I'd love to have your comments below so I can best fit my videos to what those that are watching want to see. Once again, I'm Jonathan McCoy at Landers Real McCoy. If you like this video, I think you might like this video right here. And don't forget to subscribe, hit that notification bell, and I will see you next time.